So, Laura, sometimes we get self-employed people who may not have limited companies. They're just self-employed, Schedule D, I think it's called, and they're looking to put money into pensions. How does that work compared to your typical employee who has a workplace pension?
So self-employed people can still pay into a pension scheme. What I would say is either make a regular monthly contribution if they can. So again, you'd pay £8 into a pension scheme, it'd be grossed up to £10. At the end of the year, then when you speak to your accountant and you're filing your tax return, you would tell your accountant how much you've paid into a pension scheme, and then that would be deducted from your profit. So then the amount of tax that you would pay would be lower because you've made it's classed as a business um,
Expense, business
expense really.
expense. Yeah,
Yeah.
yeah.
So the business expense, as long as it's wholly and exclusively for business purposes, then would be deducted. Therefore, you would pay less income tax.
Okay, all right, that's good. So, self-employed people have an option. They need to go out and do it themselves as opposed to being auto enrolled into a pension scheme at work.
So I think self-employed people, it's really important that you pay into a pension scheme, because if you think as an employer, when you've got an employee scheme, your employer is matching your contributions, so you're effectively potentially doubling your money straight away. Whereas self-employed, you haven't got that benefit. So it's really important for you to then put, as part of the business plan, really, some of that money aside to pay into a pension scheme to save for your retirement.